So there were some people reporting that the deal is done. It's not. The biggest part of the deal involves the language in what type of concessions JP Morgan, what they're going to concede that they've done. And that's the biggest part here. When that gets written, then this thing is done. And that's what they're probably fighting over right now. This deal could cost JP Morgan $13 billion, or depending on how much Eric Holder, the Attorney General, is putting a gun to their head about, it could cost them $26 billion. We should point out that most of the cases when banks have settled with regulators, they settle for a lot lower than the future class action suits. And now that we're in the mode that's going on here, where companies are being forced to fess up as part of, concede some wrongdoing as part of these deals, this thing could be very, very expensive for JP Morgan. We should point out that Jamie Dimon, I don't think he's going to leave as CEO. I think there's a good chance there's some structural change with management, meaning he might have to give up chairman. Right. That's a possibility. I think the bank itself, depending on how the final thing is written, JP Morgan's a very sound business. They make $20 billion a year. Mm-hmm. They wiped out more than half a year's earnings with this. But we should point out that, generally when you get involved in these sort of protracted things with the government, there's a structural problem, a structural impact on the institution. And I could see them scaling back pretty dramatically in certain areas. I mean, I could see them not getting involved in certain businesses, getting out of a lot more than they've done now. So this is precedent setting. I think and more than that, it's a great story. I mean, here's a guy that ran a good bank, inherited two crummy banks, based on what the government asked them to take it over during the financial crisis, Bear Stearns and WAMU. Yeah. Lots of problems with those banks, and he's being dinged for that.
Which is mind-blowing, because in a way you can interpret this. Jamie Dimon, JP Morgan, did the government a huge favor during the throes of the financial crisis by taking over those troubled banks. So what did he do wrong? Obviously he was critical of Obamacare and Obamonomics, as you put it in your New York Post piece. Overall,
he was the most effective critic, particularly in the business community, on President Obama's economic policies. You notice how he's not talking much about them now, even though we have an Obamacare rollout where something as simple as a website doesn't really work. Mm-hmm. They're very good at extracting, squeezing their enemies, but they can't get a website to work in Washington. So I will say this, that's his biggest sin. I mean, listen, you don't have to be a conspiracy theorist. All you have to do is look at the confluence of factors. The minute he really started talking up about Dodd-Frank, the president's signature financial reform law, the minute he started saying that this is actually hurting the economy, preventing banks from lending, is the minute he really started coming under pressure. Now, yes, some self-inflicted wounds, right? The London whale fiasco, where he sort of minimized at first how much money they lost in that trading fiasco in their London office. But that's not like systemic scandals. That's not Bernie. That's not what you tear down a big company and a CEO and a pretty good CEO about. What you tear down is when you're perceived as an enemy. And I'll tell you, American businesses have never been under. This just shows you that the Obama administration is at war with American business. They've never been under assault like this before.
It's just so hypocritical, because the government, the Obama administration, sets up the Consumer Financial Protection Bureau to protect consumers, and meanwhile they're hurting JP Morgan shareholders with this gigantic fine. Is that a fair point?
And consumers to an extent too. I mean, you start whacking them with billions of dollars every other month. Guess what? Higher fees on certain things. They don't lend money.
It's going to trickle down.
It'll definitely trickle down. But listen, I will say this about the market reaction. It's only off a few cents today.
Let's see if we can pop up the chart.
I will say this. I think investors are underestimating the impact here. We don't know all the details, but Dick Beauvais, I think, now it's up a little bit. It's flat, but essentially flat. Dick Beauvais made the best points. A point I made in my column today, and he came out today and made the same point. Depending on the legal language of this settlement, and I tell you, every investor in this stock has to look at that. This thing could cost $13 billion, or it can cost $26 billion.
Investor fatigue playing into the fact that it's not being reasonably reflected in the share price yet?
Well, they're saying, listen, I know what investors are saying. They're saying, well, all things being equal, $13 billion, they can afford it, and this is a money-making machine. They make $20 billion in profits every year. Those class action lawsuits, I mean, I remember Citigroup. They paid marginal fines on Enron and WorldCom. They paid huge class action. I think it was 4 and 6. 4 WorldCom, 6 Enron. I checked my math, but it was multiple billions for both. That was more than the regulatory fine. So usually, depending on how this thing works out, you get dinged big time. We'll see what happens here.
Is he still a Democrat, Jamie Dimon?
I think another problem with him is he made it pretty clear that he wasn't voting for the president. I think I think he is still a Democrat.
Thanks, Charlie.
Okay.
Quick note for you: prosecution or persecution? The government's crackdown on J.P. Morgan and Jamie Dimon. Tweet us at Fox Business your responses. Coming up during the hour.
And home sales.